Hey everyone, welcome to another deep dive. Today we're going to be talking about something that's probably on a lot of minds these days, the future of homeownership.
Yeah, definitely a hot topic. And I think,
Hey.
there are some trends that are making people a little bit nervous.
Yeah, for sure. I mean, it's not just about rising interest rates anymore.
Right.
We're talking about like entire regions potentially becoming too risky to insure or finance.
Yeah, exactly. That's really what we're going to be getting into today. And I think to kind of kick things off, it's helpful to start with a real person's story.
Okay.
Someone whose experience illustrates this bigger issue we're talking about.
Yeah.
So have you heard of Sarah Chen?
I have not.
Okay, so Sarah's a software engineer. She's
Mm.
34 years old, and she did everything right. She saved diligently for years, got pre-approved for a mortgage, found a house she absolutely loved, and then, bam, insurance became this massive obstacle.
Oh, wow.
Yeah, first one, insurer just flat out refused to cover her property,
Really?
saying it was just too risky. And then another insurer quoted her a premium that was triple the national average,
Oh, my God.
making homeownership suddenly unaffordable.
That's tough.
Yeah, and unfortunately, Sarah's story is not unique. It's becoming way too common these days.
Yeah, it feels like there's a bigger picture here.
You're right. Sarah's experience is a symptom of what some people are calling a perfect storm brewing in the housing market.
Okay, a perfect storm. What are we talking about here?
So there are three major factors converging to create this situation.
Okay, lay it on me.
All right. So number one, we've got climate change.
Okay.
The increasing frequency and intensity of natural disasters, wildfires, floods, hurricanes. It's making certain areas riskier and riskier to live in.
Yeah, that makes sense. I mean, we see those headlines all the time. It's got to be making insurance companies pretty nervous.
Exactly. Their entire business model is about managing risk. And these events are making it extremely difficult for them to predict what's going to happen.
So they're basically saying like, whoa, hold on a second. This is getting too unpredictable for us.
Right. And so how do they respond? They either jack up the premiums to astronomical levels or they just refuse to offer coverage at all.
Which is what happened to Sarah.
Exactly.
Yeah.
So that's force number one, climate change, really shaking up the insurance landscape. But then that leads us to force number two.
Okay, what's the next piece of the puzzle?
It's the ripple effect within the insurance market itself. So as insurers pull back from these areas they deem high risk, it creates this domino effect.
Domino effect. How so?
Well, think about it. No insurance.
Yeah.
No mortgage. Banks aren't going to lend money on a property that's basically seen as a potential wildfire target or a flood zone.
Yeah, that makes sense. I mean, it's like they're saying, hey, we don't want to be left holding the bag if this place burns down or gets washed away.
Right. It's all about managing that risk from their perspective. So no insurance equals no mortgage, which basically shuts people out of homeownership even if they could technically afford it.
It's like this double whammy, climate change making things risky, insurers getting skittish, and then
Yeah.
the whole mortgage system gets thrown out of whack.
Exactly. And then to add to this already complicated situation, we have force number three,
Okay, hit me with it.
the housing shortage. This is something we've been grappling with for a while now.
Yeah, definitely. It's tough out there.
Limited supply pushes up demand, making affordable options even scarcer, especially in those very areas that people are drawn to.
So it's like this terrible cycle. People want to live in these desirable places, but climate change makes them risky insurers pull back. And now it's becoming practically impossible to buy a home in those very spots.
Precisely. And this is how we end up with what experts are calling potential mortgage deserts, areas where traditional home financing could become a thing of the past.
Mortgage deserts.
Yeah.
It's kind of scary. What's the evidence that this is actually happening? I mean, is this just like a worst case scenario or is this actually playing out right now?
Oh, no, this is definitely happening. Look at State Farm, one of the biggest insurers in the country.
Yeah.
They've actually halted new policies in parts of California and Oregon
Whoa.
due to the heightened wildfire risk.
That's a big deal. So this isn't just talk, it's actual actions being taken.
Right. And if you look at the numbers, it gets even more concerning.
Okay, what kind of numbers are we talking about?
Well, the National Association of Insurance Commissioners, they found that the average cost of homeowners insurance in high-risk coastal areas jumped by 71% just between 2022 and 2024.
71%, that's insane.
Yeah.
That's like adding another mortgage payment on top of your mortgage payment.
Right. It makes you wonder if owning a home in these areas is even financially viable anymore.
Yeah, and it's not just the cost, it's also about access to coverage, right?
Absolutely. In California, for instance, which has obviously been hit hard by wildfires, non-renewals of homeowner policies in those high-risk fire zones have surged by 31% in 2024.
31%. So that means insurance companies are dropping existing customers.
Yeah, leaving them scrambling to find any coverage at all.
So even if you've been, responsible paying your premiums on time, you could suddenly find yourself without insurance.
Exactly. And what are your options then? Many people turn to state-backed insurance programs like the FAIR Plan in California.
Okay, and how do those work?
Well, they provide coverage, but often come with higher costs and less comprehensive coverage.
So it's like you're stuck between a rock and a hard place.
Yeah, it's a tough situation.
Yeah.
So, we've got homeowners being squeezed from all sides. What's the Federal Reserve saying about all of this? Wouldn't lower interest rates at least help with affordability, even with all these insurance issues? Well, lower interest rates could offer some relief, but even Federal Reserve Chairman Jerome Powell has issued a pretty stark warning.
Really? What's he saying?
He's basically saying that entire regions, especially those vulnerable to climate change impacts, could become uninsurable and unfinanceable within the next 10 to 15 years.
Wow. So this isn't just a blip on the radar. This is like a fundamental shift.
Exactly. And he's also emphasized that while lower interest rates might provide a temporary cushion, they won't solve the core problem.
So we're talking about structural vulnerabilities that need much bigger solutions.
Absolutely. We can't just tweak interest rates and expect everything to be fine. This requires a much deeper look at the interplay of climate change insurance markets and housing policies.
Okay, so we've laid out the problem. It's pretty daunting.
Yeah.
But is there any hope? What are some of the solutions being discussed to address this perfect storm?
There's definitely hope, and several potential solutions are being explored. They generally fall into three main categories.
Okay, let's dive into those. I'm ready for a little dose of optimism.
So the first category is establishing a federal catastrophe insurance program.
Okay.
Kind of like we have the National Flood Insurance Program.
Right.
But this would encompass a much broader range of climate-related risks.
So basically like a safety net for homeowners in those high-risk areas.
Yes, exactly.
Making sure they can still get coverage even with, the threat of wildfires or floods or hurricanes.
Exactly. It would provide a backstop for homeowners and for the market as a whole.
Okay.
And that could help, maintain stability and access to insurance even in the face of, these growing risks.
So essentially preventing those mortgage deserts that we were talking about.
Right. Exactly. Because if people can get insurance, then they can get a mortgage.
Yeah, that makes sense.
Hmm.
But wouldn't something like that be incredibly expensive? I mean, where would the funding even come from for a program of that scale?
That's a good question. It would definitely require substantial funding, but it could potentially be financed through a combination of premiums paid by homeowners who choose to participate, government allocations, and possibly even bonds specifically designed for this purpose.
Okay, so like a multi-pronged approach.
Exactly. And, it's important to remember that inaction also carries a cost.
That's true.
The economic and social consequences of these climate-related disasters are already massive, and they're only going to get worse.
Yeah, no, that's a good point. It's about weighing the costs of action versus inaction.
Right. So that's the first category, federal catastrophe insurance. The second category involves focusing on climate-resilient building standards.
Okay, so how would that work in a practical sense?
Well, it would basically mean revising building codes to mandate things like fire-resistant materials, stronger foundations that can withstand flooding elevated structures in areas prone to, sea level rise or storm surge.
So basically making homes tougher and more adaptable to the changing environment.
Exactly.
Would this only apply to new construction, or could existing homes be retrofitted to meet these standards?
That's a great question. It would likely involve both.
Okay.
New construction would obviously have to adhere to the updated codes.
Yeah.
But there could be incentives or, phased-in mandates to encourage homeowners to retrofit existing properties as well.
I could see that being a tough sell for some people. I mean, especially those who are concerned about government overreach or the cost of, retrofitting their home.
Yeah, there will definitely be challenges and debates surrounding implementation. But the potential consequences of inaction, widespread uninsurability, declining property values, those make these conversations absolutely essential.
Right. It's about finding that balance between individual property rights and the collective good.
Exactly.
All right, so we've got federal catastrophe insurance, we've got climate-resilient building. What's the third category of solutions?
So the third category focuses on state-level reforms.
Okay, and you mentioned California's SB 872 as an example.
Right. So SB 872, for instance, aims to limit how much insurance companies can raise premiums and make it harder for them to draw policyholders in those high-risk areas.
So it's about protecting homeowners.
Yeah, exactly, from those sudden, unaffordable rate hikes or being left with no insurance options at all.
Are other states looking at similar measures?
Absolutely. A lot of states are exploring reforms aimed at kind of finding that balance between the needs of the insurance industry and the needs of homeowners.
Right.
Some states are even looking at creating state-level catastrophe funds to provide additional support for insurance coverage in those high-risk regions.
Okay, so it's like a mix of approaches.
Yeah, and it makes sense because, different states are facing different risks.
Right.
What works in a coastal state might not be appropriate for a state that's prone to wildfires.
Yeah, it's not a one-size-fits-all situation.
Exactly. So it's kind of like a laboratory of democracy.
I like that.
Different states trying different approaches and sharing what they learn.
So with all these solutions being proposed, do you think any of them are actually going to work? I mean, can we really solve this problem?
That's the million-dollar question. There are no easy answers or guarantees. This is a really complex issue, and it's going to require a combination of, innovative policies, technological advancements, behavioral changes.
So you're saying it's not about finding that one magic bullet. It's about taking a multi-pronged approach and being adaptable.
Exactly. We need to think long-term. We need to be willing to adapt. And it's going to require collaboration between policymakers, industry leaders, communities, and individuals.
Okay, so let's shift gears a bit. What does all of this mean for the average person? I mean, if these trends continue, could certain areas just become so expensive or risky that people simply can't live there anymore?
It's definitely a possibility that we need to consider. Some areas might just become too expensive to insure, even with government support.
Wow.
Others might face such frequent or severe climate impacts that rebuilding just becomes unsustainable.
So we're talking about potential climate migration.
Yeah, potentially.
People being displaced from their homes because of these factors.
It's a complex issue with, social, economic, and ethical dimensions.
It's not just about housing, it's about the future of our communities.
Exactly.
So we've covered a lot of ground here.
We have.
From Sarah Chen's story to, potential solutions like federal catastrophe insurance. Is there anything else you'd like to add before we wrap up this part of our deep dive?
Yeah, just this isn't a problem that's going to go away on its own. The choices that we make today, both individually and collectively, are going to have a huge impact on the future of housing and the communities we call home.
Yeah, it really makes you think. You mentioned earlier that the traditional model of home ownership might be under pressure to evolve. What did you mean by that?
Well, for decades, the American dream has been so closely tied to owning a single-family home.
Right, that classic image.
Yeah, exactly.
The white picket fence.
But that model is facing some pretty serious challenges these days.
Yeah, both from a financial and an environmental standpoint.
Exactly.
So are you suggesting that we need to, rethink what it even means to own a home?
It might be necessary. We may need to explore alternative models of housing that are more adaptable, more affordable, and more resilient to, the kinds of challenges we're facing.
What kind of alternative models are you thinking of?
Well, there are a few that are gaining some traction. One example is co-housing.
Co-housing?
Yeah, it involves a group of people sharing common spaces and resources while still having their own private living areas.
So kind of like a blend of communal living and individual privacy.
Exactly. And it can be, a more affordable way to live, especially in areas where housing costs are really high.
Yeah, and it could also be a way to build community.
Right, exactly, for people who are looking for that.
What are some other examples?
Another option is multi-generational living.
Okay.
Which is becoming increasingly common, multiple generations of a family living under one roof.
So that's interesting. It's like going back to the way things used to be.
Right. Grandparents, parents, children all living together.
Yeah.
And it can help with affordability.
Yeah, I can see that.
Provide support for elderly family members and foster those stronger family bonds.
So co-housing, multi-generational living. Any other examples?
Yeah. Community land trusts are another model that's gaining some attention.
Okay, I've heard of those, but tell me more about how they work.
So it's basically a nonprofit organization that owns the land and leases it to homeowners.
So you're not actually buying the land.
Right, you're just buying the building.
Which makes it more affordable.
Exactly. And one of the key benefits is that it can help prevent displacement in rapidly gentrifying neighborhoods.
Right, because the land trust retains ownership of the land.
Exactly. So they can ensure that the housing remains affordable over the long term, even as property values rise.
That's a really important point.
Mm-hmm.
So, we've got these alternative models emerging. Do you think they have the potential to become more mainstream?
It's hard to say for sure, but I think they have a real shot, especially as the limitations of that traditional model become more apparent.
It feels like we're at a turning point.
I think so. We're being forced to rethink things and to explore new possibilities.
Yeah. Well, this has been a really insightful conversation. Is there a final thought you'd like to leave our listeners with?
Yeah, I would just encourage everyone to stay curious and engaged in these conversations about the future of housing. Explore these alternative models, think critically about the challenges that we're facing, and advocate for policies that promote affordability, sustainability, and resilience.
Great advice.
Yes.
Well, thank you so much for joining us and sharing your expertise. I think this deep dive has given our listeners a lot to consider.
It's been my pleasure.
The future of homeownership might look different than what we've been accustomed to. But with awareness, innovation, and a willingness to adapt, we can create a future where everyone has access to safe, affordable, and sustainable housing options. Thanks for tuning in to this deep dive. Until next time, keep diving deep.